Welcome to Finance for World. Today, we've got an absolutely fascinating explainer lined up for you. We're going to look at how a single geopolitical catalyst is sending absolute shockwaves across global finance. I mean, we're talking about the potential for a massive peace deal here, and how it's instantly rewriting the script for commodities, stocks, and even crypto. So let's just get right into it.
Okay, so here's our roadmap for today. First, we'll look at the peace deal catalyst itself. And then we'll track the ripple effect. We'll see oil prices taking a dive, global equities rallying higher, emerging markets seeing gains, and finally, Bitcoin bouncing back. All right, Section 1, the peace deal catalyst. Geopolitics set the stage. So what kicked this whole thing off? Well, it was a statement from U.S. President Donald Trump noting that negotiations with Iran are, quote, proceeding in an orderly and constructive manner. With an in-principle agreement reportedly largely negotiated to end the conflict, the market just instantly began pricing in a dramatic easing of global tensions. Now, the U.S. administration did signal they aren't rushing into a deal, but, significant progress is clearly being made here. And the real focal point of all this is the Strait of Hormuz. Think of this strait like the ultimate bottleneck for the global economy. I mean, it handles about 1/5 of the entire world's oil supplies. It had been effectively closed due to the conflict, which trapped all those tankers in the Persian Gulf. So the mere potential of it reopening, that means millions of barrels of crude can finally exit and reach customers worldwide. It's absolutely huge. Moving on to Section 2, oil prices take a dive, the immediate commodity reaction. Now, the reaction in the oil markets was swift, and honestly, it was severe. We saw a steep, immediate drop of over $4 a barrel. To give you the exact numbers from the trading floor, benchmark U.S. crude dropped by $4.77, pushing it all the way down to $91.83 a barrel. Meanwhile, Brent crude, that's the international standard, sank $4.86, landing at $97.78. This was literally a massive repricing event happening in real time. And it's wild how fast this transition happened. Just days ago, markets were completely choked by geopolitical fear, blocked tankers, and severe supply anxiety. Fast forward to today, and we're suddenly pricing in a peace dividend, an open strait and normalized supply that is just instantly cooling off those overheated prices. But local realities can sometimes be a bit of a paradox compared to the global trends. Take India, for example. Despite that massive global crude drop we just talked about, state-run oil marketing companies in India actually just resumed daily price revisions after a 4-year freeze. The result? Well, they've seen their fourth fuel price hike in just 10 days. Prices were raised by an average of 2.80 rupees per liter, which actually pushed Mumbai petrol past 111 rupees. It's a really fascinating local paradox right in the middle of a global slide. All right, Section 3, global equities rally higher. The stock market boom. So, this easing of tension sent a massive wave of optimism straight into U.S. markets. Wall Street extended its gains across the board. The Dow climbed to 0.6% to touch a fresh intraday record high. The S&P 500 added 0.4%, and the tech-heavy Nasdaq gained 0.2%. Investors clearly looked at those falling energy costs and saw a direct, immediate boost for corporate America. But hey, this wasn't just an American phenomenon at all. It was a truly global rally. Over in Europe, France's CAC 40 and Germany's DAX both posted really solid gains of over 1%. But the absolute standout, Japan's Nikkei 225. It surged a massive 2.9%, and that leap actually pushed the Nikkei across the historic 65,000 mark for the very first time ever. You've got to keep in mind, Japan imports almost all of its oil, primarily through that exact same Strait of Hormuz, so this news was incredibly bullish for them. And in India, the market experienced this really powerful, broad-based risk-on surge. The Nifty decisively reclaimed the 24,000 mark, jumping 1.32%, while the Sensex skyrocketed by over 1,000 points. What's absolutely vital to understand here is the market breadth. Over 2,700 shares rose. So this wasn't just, a handful of tech stocks carrying the weight. It was led by heavyweights in banking and financials, companies like L&T and HDFC Bank. Crucially, India's volatility gauge, the VIX, slumped nearly 7%. That proved the market was just rapidly shedding its fear.
Which brings us to Section 4, emerging markets see gains. The developing world reacts.
To really understand this reaction, we have to trace the chronological diplomatic push that got us here. In the days prior, regional powers like the UAE, Saudi Arabia, and Qatar actively urged Washington to give negotiations a chance. Then, on Friday, Pakistan's army chief arrived in Tehran to help mediate. And over the weekend, tangible signals of progress finally emerged. That created the perfect setup for emerging assets to rally as the new trading week began. Actually, let's be precise, it wasn't a universal win. Not all emerging markets reacted equally. We definitely saw clear winners, like the Colombian peso and the Indian rupee outperforming, alongside really strong demand for Asian tech stocks tied to the AI boom. But on the flip side, local macro issues really dragged down the laggards. The Turkish lira continued to struggle despite central bank interventions, and Bolivian dollar bonds actually fell for a ninth straight session because of localized protests and blockades. So it's a good reminder that local macro issues can sometimes completely outweigh a global sigh of relief.
Finally, Section 5, Bitcoin bounces back. The speculative asset rebound. Now, before this rally, Bitcoin was having a seriously rough time. It had just suffered a highly volatile 3-week correction, tumbling nearly 39% from its October 2025 peak. This pullback was driven by a really harsh mix of heavy, leverage-driven liquidations across the entire crypto market, plus hawkish concerns from the Federal Reserve about interest rates. Basically, the market was incredibly tense. But then, no way. Bitcoin just completely shook off that fear and decisively reclaimed the $77,000 level. As that broader macro optimism swept through equities and oil, crypto bulls gained some serious momentum. Geopolitical de-escalation really acts like a rising tide, and the world's premier digital asset rode that wave right back up from its crucial support zones. But if you peek underneath that headline Bitcoin number, the wider crypto market tells a slightly more nuanced story. While coins like BNB and Solana saw solid gains, major altcoins, we're talking Ethereum, XRP, and Dogecoin, they actually remained under pressure, either sliding or just trading flat. This indicates a very clear flight to quality within the crypto space. Investors are showing a strong, continued preference for the stability of a large-cap asset like Bitcoin over those more speculative altcoins. So, that brings us to the ultimate question as we wrap up today's explainer. Is this broad market rally a lasting peace dividend, or is it just a temporary pause in an otherwise volatile global landscape? The data definitely shows a market eager for stability, but as we know, geopolitics can change in a heartbeat. I'll leave you to ponder that one. Thanks for learning with me today, and make sure to keep your eyes on the data.